Yeah, good morning, everyone. So yesterday we saw some reverse trend in US market wherein tech stock came off and other traditional stock moved up. This has happened with CPI inflation coming at minus 0.1% month on month versus expectation of 0.1%, and last month it was flat zero. And year on year, the interest CPI inflation came at 3% versus expectation of 3.1%, and last month 3.3%. So the lower inflation has triggered this sell-off as first of all, the market was running on expectation of rate cut. And with this inflation figure, the things has got confirmed that the chances of September rate cut has increased substantially to almost 92%. And that's why the market is now more of a coming into profit booking mode, and lower inflation is creating some concerns about the demand in the tech market from the consumer side. So, so that has given a trend, and the tech stock in US came off. Nvidia came off over 5%. Similarly, the Asian market also are seeing a decline in the tech-related markets. Most of the Asian markets are down, except Hong Kong, where the market is seeing positive trend. That is because of though the tech stock are down, but the property stocks are moving up. There is an expectation building up that the China will offer substantial package for revival of the property market in their third Millennium meeting, which is expected to start in mid of July. So that expectation is boosting up the property stock over there. So overall, what we see that this is more of a specific sector-led decline, so may not have greater impact on Indian market. Uh, Indian markets are likely to remain what we see that in a range mode. I'll request technical people to take up from here.
Yeah, good morning, all of you. Yesterday we saw the sidewise momentum in market and Nifty trading within the range. So today we expect positive, not open, but witness to range bound during the day. Nifty has an immediate resistance around 24,400. If Nifty weekly close above for 24,400, then we expect further rally towards 24,470, 24,550, 40 and upside. Downside first immediate support 24 to 40 and major support place around 24 140. Last two trading session we saw that Nifty taken this support that 24 140 and 200 and again bounce back in that rally that support range. To expect this is if Nifty trading about 24 140 then trend is a positive. We can hold it your long position. Bank Nifty also facing immediate resistance around 52 700. Yesterday we saw that last half an hour, last 1.5 hour bounce back in Bank Nifty. The next immediate up move towards 53,000 and then 53 to 40 and first immediate support place around 52,000. Below 52,000 next support 51 740 for Bank Nifty. So both index looks positive today's session. We closely watch weekly close mention that break the important resistance level and close, then we expect further rally. By Fin Nifty also looks positive at current level 23 600 is the first immediate support. Upside 23 770 and then 23 870 is a major resistance for Fin Nifty. The all three index looks positive today's session. Stock specific Asian Paint looks positive. We already given call in Asian Paint and we last two trading session Asian Paint given a good rally and yesterday closed above the important level that is 200 DMA and we expect this momentum to be continued towards 3100 and 3140. Downside 2970 first immediate support for Asian Paint. Deepak Nitrite also given a big breakout yesterday. We see that close the important level 2750, and we expect this momentum to be continue. Weekly chart also showing the positive momentum. Upside 3020 next target 3000 is the next target for Deepak Nitrite. Downside major support place around 2690 and 2670. Those have position they can hold it. Negative side export looks negative. Last two trading session we saw that some pressure is increasing, and yesterday break the important support zone in export that is 4020 and close below the 4000. We expect this pressure to be continue. If again export break the 3940 today's session, then we expect further sell up towards the 3850 and 3800 at downside. So that's it for technical derivative I can carry.
Yeah, thank you. Good morning, everyone. So on the derivatives front, as we are witnessing from last 2 days of trading session, Nifty in the first half, we are seeing that the pressure has been witnessed. In the second half, a complete recovery has been seen. Currently, the same situation today also we are seeing if Nifty is likely to open on a positive note. But again, 24,500 is acting as an important resistance zone where highest call rate of position is intact. The shifting of 24,500 is very much important. Then only we might witness a fresh rally or trend clearance in the market. Till that point of time, we might expect the momentum to be on the flattish note, or the range bound momentum will be seen. While in yesterday's session, we have seen that the PCR closed on a positive note in the second half, and the pullback came till at that point of time. We have seen that the PCR came up sharply, due to which the fresh long positions we might expect to be seen in today's first half of our trading session. Currently, India VIX yesterday decreased by 3%. In last 2 days of trading session, we have seen an India VIX shooted up sharply, but again, we are seeing that the India VIX is likely to cool off from yesterday day of a trading session. So market trend seems to be on the positive front on the stock specific side, but on the index specific front, we expect the momentum to be on the range bound. While on the sectoral specific front, we are seeing that ONGC FMCG looks positive. Selective counters from that sector will be IOC, Glenmark Pharma, Balrampur Chini looks positive in today's day of trading session. So that's it from Better Different. Thank you.
Good morning. Oriental Rail Infrastructure has received 432 crores of orders for supply of 1200 wagons from Indian Railways. So that's positive. And yesterday, Anand Rathi Wealth result came out. Result has improved. AUM came at 69,000 crores, which was up by 16% quarter on quarter and 59% year on year. Share of equity mutual fund continues to rise as a percent of total AUM. It was at 54% in the June quarter compared to 51% in March quarter, and last year 48%. Revenue growth was stronger than AUM growth on a quarter on quarter basis. If we see, revenue grew by 29%, EBITDA grew by 34%, and profits grew by 29%. So a good set of numbers from Anand Rathi Wealth. We are positive. Thank you.
Good morning. Yesterday, TCS results came out, and the result is ahead of expectation. Dollar revenue grew 2.2% quarter on quarter on a constant currency basis, against an expectation of 1.5%. EBIT margins at 24.7% were ahead of expectations, despite of wage hikes expected during the quarter. And management has reiterated margins to be around 26 to 28% going forward on the back of stable pricing. The TCV order book came at $8.3 billion, a little lower than the previous quarter. Last quarter, it was $13.2 billion. Although the management stated that it is a timing issue with some deal closures. So these orders got spilled over to the next quarter, second quarter. On the employee front, after a decline of 3 quarters, we have seen an addition of 5,000 plus employees during the quarter. Stock is available at 26 times 2-year forward earnings. Though discretionary spending remains under pressure, TCS management is confident about the strong growth momentum from the regional markets and sees them as material revenue contributor in the coming years. So one can accumulate the stock with a long-term perspective. Secondly, today HCL Tech will be reporting its numbers in the evening. Revenues are expected to decline by around 2% quarter on quarter on a constant currency basis. This is a seasonally weak quarter for the company. Even EBIT margins would be are expected to decline by around 70 bips to 17%. So, company earlier in the previous quarter had given a guidance of 3 to 5% revenue guidance for FY25, and that's expected to be retained even in the current quarter. Stock is available at 23 times 1 year forward earnings, and one can expect some re-rating in the IT stock post the TCS numbers. So one can accumulate HCL Techs for a long-term perspective. Thank you.
Yeah, apart from this, Hindustan Zinc has reduced the zinc and lead prices by around 5,600 and 1,600 rupees. Though LME has not come off, this looks a bit surprising move from the Hindustan Zinc. So will act as a negative for Hindustan Zinc in today's trade. Then Aditya Birla Fashion has increased its holding in one of the company where it was an associate company, and company was holding around 33% holding. Now the holding has moved up to 51%. This is Good View Fashion Private Limited, which is managing Tarun Tahiliani brand, which is a recognized brand in the ethnic wear. So we feel this will act as positive. Now the company will be incorporating these results as in a total overall on line-to-line basis. So that will act as a positive for the company in financial results. So that's all from us. And I'll request commodity company to take up from here.
Thank you very much, sir. Good morning, everyone. So yesterday we had witnessed rise in gold and silver, and they should continue. So buying on dips is recommended. One can buy gold around 73,100 with a stop loss of 72,850. On upside, we are expecting 73,500 to 650 levels. Silver also we recommend to buy on dips around 93,800 to 700 and maintain a stop loss of 93,000. On upside, 95,000 is the target we are eyeing for. And in metals, copper yesterday had witnessed a correction, so it can test 853, 852 on downside, and for a pullback, one can initiate a buy with a strict stop loss of 848. On upside, again, 860, 62 is the resistance zone, and we expect selling from the resistance area. Zinc also should consolidate from 270 to 275, so one can trade within the range. One can initiate a buy around 272, 270, 150 with a stop loss of 270. And on upside again, one can sell around 275 with a stop loss of 277. Crude oil, whereas we are expecting prices to test 69.70, 7,000 on upside. So buying on dips around 6,900 to 68.80 and maintaining a stop loss of 68.30 is recommended. Whereas natural gas prices are continuously drifting down and weaknesses witnessed further with sustaining below 202 levels. So it is expected to test 185, 180 on downside. From there, we can expect some pullback. But all in all, weak below 202 levels. So sell on rise around 195 with a stop loss of 202. And on downside, 185, 180 is the target we are aiming for. That's it from us. Thank you very much.